So I'm Mark Abrams. I head up trade at Trade Finance Global. Yes, so what we've seen actually, especially in Europe, is a big push towards trying to bring liquidity or finance into the system. And that's what Trade Finance Global aims to do. But actually, if you look at BAL regulations, a number of regulation and issues that have actually come from it, we're seeing more and more in the last few years. So one is on the insurance side, we're seeing banks, because of, in relation to their capital adequacy and how it's treated, we're seeing more pressure in terms of wording, and that actually filters through to the insurers and the underwriters they're working with. So that there's less desire to work with new underwriters which are coming to the market, and very much their ratings are under heavy scrutiny. We're seeing more banks who are actually cutting correspondent banking relationships. So what that actually means for the trader on the ground who wants to issue a deferred LC or a USANT LC is they're having issues kind of where we're talking about cross-border trade. So we're seeing some of these mid-market banks actually have capacity issues and struggling. And I guess lastly, we're seeing a lot of the focus on the largest traders. It's not a new thing, but that's a real issue that we kind of aim to tackle at Trade Finance Global. The largest traders are banked by well-known banks, and this kind of the more scrutiny and regulation that the names that we know of are put under, the less willing they are to come into the kind of mid-market looking for that liquidity for the banking and fund space. So in short, no. Most companies, what there really is a lack of in the market is education information. What Trade Finance Global aims to do is provide a huge amount of information from partnering with organizations like ICC in terms of rules, and also looking at different sector analysis and working with experts in those fields of what's going on, how to trade and how to actually access finance and look at different structures. And one of the main issues outside of education is just doing what your house bank or funder is telling you. And a lot of the, I guess, alternatives who are coming into the market are effectively going for the easiest fruit on the trees, meaning that it's just back to invoice finance and the basic. So it's just important to show that there is a world before just an invoice, and that there really should be no trade which is left unfunded. So absolutely. So you have both the regulation side, which we've spoken about, and you have also political instability. What that means for a mid-market trader, who usually, the smaller you are, the more focus you have on specific jurisdictions. If you're just looking at, and there's a trade war, a dispute, a tariff which is brought in, actually the ability to quickly change in what you're doing and the effect that will have on your business is huge. So we've seen it from warehousing and actually not having capacity to companies not wanting to go forward with growth and investment and taking on new facilities, because if a specific jurisdiction changes in relation to what's going on in terms of government or trade rules, it massively will impact on margins, and that really affects the company.